Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. Excited to share with you a couple little tidbits this week economically. This week is obviously Thanksgiving. And when Thanksgiving is over, generally the focus turns to Christmas spending, and that drives a lot of the economy. This year, as your families gather around the table, hopefully the festivities provide a welcome reprieve from the political tensions of recent months. It's expected that Americans are going to probably spend about $1 trillion spreading holiday cheer. Part of that is because of some of the resilience coming from the economy. A lot of people feel that we're going to hit record sales growth from prior years, but you can tell that it's not quite as much as it was in last year or the year before. And some of the reasons for that is in 2020, 2021, even 2022, there was a lot of that was based on COVID money that was coming out to help people, and so we'll kind of excuse those years. 2023 was pretty strong. It was stronger than expected, but we really like to go back to 2010 through 2019, where you can see the pre-pandemic average is about 3.6%. But a lot of that is a lot of the reasons why we're going to have an increase is easing inflation. So really, people are expected to spend a little bit more than prior years. A lot of people think that they'll probably end up spending about $900 per person. Part of the reasons for that is we have real wage growth going on right now. It's remained positive for about a year and a half. Stock market gains and recent Fed cuts have lifted consumer confidence. There's a lot of different reasons for that, but some of that will be based on some elevated prices, but as a general rule, year over year, they are expected to spend the average Americans a little bit more than normal. Retailers generally get a disproportionate share of annual sales from their Christmas sales, and so deal hunting consumers are turning to discount retailers, boosting revenue and profit forecasts. But as a general rule, apparel, specialty goods, and other items are seeing big demands as shoppers are focused on essentials, especially coming out of this high inflationary environment. So we see that the year should be pretty good. What's interesting is when Thanksgiving is this late in the year, you generally have a few fewer days, or maybe even a week less of shopping. Thanksgiving is on the 28th this year, but for the most part, that isn't as big as a deal as it used to be, because most Americans are not purchasing all of their stuff in stores; they're actually getting them online. So we'll kind of keep an eye on this. What does this do for your portfolios? Hopefully the market stays strong. Consumer spending does have a lot to do with profitability of the markets, and we make sure that those are looking good going forward. So keep that in mind as you watch what's going on with your portfolios, and we'll kind of hopefully have a strong end of the year like we generally do each year. So that's about it for this week. If you have any questions, feel free to reach out to us and ask any questions that you have. Feel free to forward this to anybody that you want. We're more than happy to help in any way. We look forward to visiting with you guys after the holidays, and if you have any questions in the meantime, let us know. We'll talk to you soon. Bye-bye.